Doing some charting on some tech names, some of the biggest names in the market. Thought I would start with Apple just to see where we're at in the overall market. And zooming out to the monthly chart, kind of get an idea of where I think we actually are. And I think it is likely that we are in the final leg of this 5-wave move that started back in the 80s. So whatever you want to call it, some people call it the secular bull run, super cycle, whatever you want to call it. Anyway, I think the third wave was right here, fourth wave right here, and then we are currently in the fifth wave. And I have that labeled as 1, 2 was during the crash in 2018, the end of 2018. And then we had a first wave, second wave was Corona crash. So this was 1, 2, and then we had this huge move up here for the overall third wave. And then we have fourth wave right here and fifth wave right here. So I see this as basically there's a first wave down here that's back in the 80s. 1, 2, 3. So 1, 2, 3, 4, 5, 3, 4. And then on the last fifth wave, we have 1, 2, 1, 2, 3, 4, 5, 3. And then if you look at the fib for where we're at, you'll see currently this correction that we've had is only going back to less than the 0.38 fib if the second wave is right here or right here. So we're basically retracing this move from January of 2019 to January of 2022. It's a fourth wave retracement. So this second wave lasted not very long. It was pretty short and sweet, but this fourth wave is just lasting a lot longer. And I think that's pretty typical. Usually a second wave or a fourth wave will last longer. If the second wave lasts a lot longer, then the fourth wave will be kind of short and sweet. We're doing the opposite right now. And so this fourth wave is taking place right now. And so if I was going to project where I think Apple will be when it finally tops out and we actually have a market crash, I would say, based on fibs, not taking into account the ones before 2015 because we went parabolic since then. Let's say we do go back to 117. I think that Apple can hit around 200 bucks, 197 to 216 before we finally top out. And that would take into account 1, 2, 3, 4, and then 5 when we move higher. So if we zoom in here, I have this charted too. I think that this fourth wave is actually going to last a lot longer based on what I've seen. I think that we're going to get another move higher here going into December. Maybe even break the top of the all-time high at 183, maybe hit like 185. And then we're going to have a 5-wave move down here, which could take, I mean, it could be short and sweet depending on what the Fed does, but we're going to come down here, and I think that a good target would be 117. 117 is, I think that's still within the 125. 117 would still be fine. It wouldn't go past the 50% retracement. I think that's a good target for the C wave, and then we would move higher after we hit that to, I'm guessing, like 200 to 215. However, they could pump it higher based on it being the last wave higher. But anyway, let's zoom in here now on the shorter time frame and just show you where we're at, in my opinion. I think we have ABC for the overall A wave. And then I think that based on what I see on this wave right here, it's very corrective. It's not very impulsive in my opinion. I think we have X, Y, and then we're going to get a Z wave higher. I'm targeting like somewhere in December. to hit the top of here and complete the overall B wave, and then we'll get another move down, pretty substantial move down in somewhere in 2023. So if you look at this move right here, it's different than the SPY. SPY looks like it could be 5 waves. This looks more like corrective to me. It still looks like A, B, and then if you zoom in here on like the 1 hour time frame, you'll see that this looks corrective move back, and then another corrective move right here, and then corrective, ABC, B wave comes back into this right here, and then we get another ABC move down here. I think we could potentially hit maybe like 134, but not much lower than that, and I think that we're going to start reversing into earnings at the end of October, and then potentially rise all the way up here into December, and then like I said, fall one more time, and then go higher. So I'm expecting that probably to play out probably maybe like May to July of next year. I mean, this took December to June to play out. That was 6 months. This is likely going to take about 6 months if it plays out. So probably like sometime in the summer next year, we could see potentially a pop. But then again, it just depends on when the Fed decides to stop raising rates or hold the rates at a certain level for a long enough time period where we can recover. So that's kind of what I'm thinking on Apple, though. For the monthly time frame, I think that that's pretty much where we're at. I think that this last wave has just been really explosive, and that third wave from January of 19 to January 22 took 3 years and was the most explosive by far. And then we're just seeing a little bit of a hold up here for the fourth wave, and we're going to see higher in the 200s here, probably sometime into like 2024, 2025. It's kind of my thoughts. So I don't think we're crashing yet. I think that we're still correcting, and we're going to see another move higher. I think the crash will come maybe in a couple years. So this could be short and sweet too. It could be until the end of 2023, and then we crash. And when we do crash, let's say we do go to 200, we're looking to come all the way back probably anywhere from 104 down to 45, which sounds kind of crazy, but you got to remember this is a completion of a move that started back in the 80s all the way to 2022 so far, potentially 2024. So that's kind of what I see so far. Another thing that's interesting too, I was looking. I should show you the tweet that I just saw. It was an interesting way of thinking about it. They were saying that we're going to get a run for no reason, basically. Everyone's going to be bearish. We're going to melt up. Everyone's going to be trying to short the market. And then that is when the Fed is going to pivot, because no one's going to believe in the rally. And then they're going to pivot after we rally. And then the market's going to go even higher. And then everyone is going to FOMO in, which will push it even higher. And then that's when we get the crash. So you got to think about the psychology of that too. That makes a lot of sense to me compared to now where everyone is bearish. They got to do another rally, and then they got to do something that's going to make everyone be completely bullish. And then that's when they drop the hammer on the overall market. So I don't think we're there yet. We're still in a fourth wave. This would be fourth wave down here, and then ultimately the fifth wave of the fifth wave at the top. And obviously this has been an extended fifth wave since June of 2016. So Trump was in office, we go way higher, and then we have a little bit of a hold up here, pretty much a little bit when I guess Biden was in office for about a year, and then we started correcting this year. But yeah, I'm saying the same thing over and over, but you understand what I'm saying. Fourth wave is really annoying, but you got to remember the second wave was short and sweet, so the fourth wave has got to play out a little bit longer. yeah, that's pretty much it on Apple. I'm expecting 134 and then a move higher to 185 to maybe break the all-time highs in December, and then another move lower in 2023. So I don't know how that lines up with the Fed, but I think we're getting ready to take off here in the next, probably next week, to be honest. I'm looking for a lot of green in October for the overall market. So yeah, that's pretty much my opinion. What do you guys think? Let me know what you think in the comments. Like and subscribe. I'm going to do some more tech videos and go over some more charts, but I don't see very much downside on Apple. So there it is. I will see you again soon.